Now, this might presage what's going to happen on the US markets, because here what's happened is, whereas we thought it will drop off, it's just kept rising. By the way, in the case of the UK, given all the economic woes and all the negativity, this has got more to do with currency movements and how companies in the FTSE 100 earn profits in US dollars because they largely export to America, and how that's booked into their accounts than it has to do with UK domestic growth. If you think the FTSE 100 means you're investing in British companies, I'm afraid the most British thing about them is not their ownership. It's not where they make their profits, because both of those are foreign owned and foreign made. It is simply that they happen to have a listing in the London Stock Exchange. That's the most domestic thing about them. Okay. So anyway, that's FTSE 100. Unusually for the FTSE 100, and here's a warning to you, as recently as April here, it was at 1999 levels. Okay, it has a tendency to not perform well. So this is very unusual that suddenly it's going against the grain, and I'm sure it will revert back to mean. The S&P 500, which I happen to own this, I don't recommend this. This is not a recommendation. It would be incredibly irresponsible for me to recommend anything leverage, let alone give any kind of individual information. But that's where we are. Now, is that going to pull back? In which case, people are going to lose 50% of their money in 2 months. Now, I want to tell you something. What is what I call a pain index, or an ulcer index? An ulcer index for any security, whether an exchange traded fund or otherwise, is depth of fall multiplied by duration. Okay, depth times duration. Now, that's not a sophisticated measure. You measure the depth of fall, say 20%, times duration, say 11 months, and that comes to 220 pain. And you say to yourself, shit, that's a lot of pain. That's too much for me. Okay, and you look at it and you say, no, depth, duration, not for me. Depth, duration, not for you. Okay, a very easy way out of it is anytime it's a mummy bear, you'll get the hell out of there. All right, and you'll only enter if it's rising, and if that falls, you get the hell out of there. Okay, that will make you incredibly rich. You'll outperform the S&P, and you'll say to me, can you outperform the S&P? And I'll go, yeah, there you go, bang, simple. All right, there you go, simple strategy. Strategies are not the scarce resource. Money, capital is the scarce resource. Okay, now, the ulcer index, depth times duration. Be careful. This has an incredibly high ulcer index. It is not suitable for people other than those on a risk profile level of about 10 out of 10 risk loving. Got it? So when you see these things, be cautious, be careful.